Welcome to this comprehensive investment overview of Solar Industries India Limited, with data current as of May 2026. Solar Industries, listed as SolarINDS on the NSE, currently has a share price of over 18,300 rupees. The company commands a market capitalization of over 166,000 crore rupees and has seen a remarkable year-to-date return of nearly 50%. The story of Solar Industries begins in the 1970s with founder Satyanarayan Newal in Rajasthan, starting as an explosives dealer. By 1995, Solar Explosives Limited was founded in Nagpur. Rapid expansion led to the launch of manufacturing capabilities and building a full-stack explosives portfolio by 1998. The company timeline highlights key milestones from its founding in 1995. By 2000, it achieved national scale, securing Coal India as a major client. International expansion began in 2005 with entry into Africa. Significant events in later years included an IPO listing in 2006, securing a defense license in 2010, and exceeding 450,000 metric tons of annual explosives production by 2019. More recently, in 2026, the company announced a mega factory for AI drones and reached an all-time high stock price. Solar Industries operates across three main business divisions: industrial explosives, defense munitions, and international exports. Industrial explosives are the largest revenue driver at around 55%, serving key customers like Coal India. Defense munitions account for about 27% of revenue and include advanced products like the NAGASTRA-1 loitering munition. The growing international business contributes about 18% of revenue, reaching mining customers in over 90 countries. Solar Industries boasts a significant global footprint, serving over 90 countries with manufacturing presence in 9, operating more than 40 plants. The company holds a 55% share of India's explosives exports. International revenue has shown strong growth, hitting a quarterly record of 960 crore rupees in Q2 of FY26. The company is actively expanding in key international markets across Africa, the Middle East, Central Asia, the Americas, and the Asia-Pacific region. Solar Industries is India's largest domestic manufacturer of industrial explosives and defense munitions, with its headquarters in Nagpur. Founded in 1995, the company has 2,403 employees and a substantial promoter holding of 73.2%. Their business segments include industrial explosives for mining and infrastructure, defense munitions as their fastest-growing segment, and a strong exports focus with an ambitious 30+% growth target for FY27. They also supply mining chemicals, such as ANFO and emulsion explosives. The company's financial performance in FY26 was robust. Annual revenue reached over 9,800 crore rupees, marking a 30.5% year-over-year increase. Net profit rose to 1,678 crore rupees, up 38.7% year-over-year. The fourth quarter showed exceptional growth with revenue exceeding 3,000 crore rupees and net profit at 548 crore rupees, a 70% increase year-over-year. Long-term trends show steady growth in both annual revenue and net profit over the past 5 years. Solar Industries has demonstrated exceptional stock performance, significantly outperforming the Sensex index. The stock recently hit an all-time high of 18,699 rupees in May 2026, marking a 5-day gain of 17.65%. The stock is currently trading above all key moving averages, reinforcing a bullish technical outlook. Valuation metrics show the stock trades at a premium. The PE ratio is approximately 99x, significantly higher than the peer average of 47x. The PB ratio also indicates a premium valuation, trading between 26x and 36x book value. The market cap stands at 1.66 lakh crore rupees, which is roughly 11.9 billion United States dollars. Trailing 12 months revenue is 9,838 crore rupees, and earnings per share for FY26 is approximately 185 rupees, reflecting steady earnings growth. The dividend yield remains minimal at 0.07%. Key growth catalysts drive the future outlook for Solar Industries. The defense sector boom is fueling massive domestic demand, with revenue guidance raised to 45 billion rupees for FY27. Export growth is targeted at over 30% for FY27, capitalizing on their presence in over 50 countries. A secured 2,229 crore rupee order from Coal India anchors the core industrial revenue stream. Management targets a 14,000 crore rupee total revenue by FY27, a 42% jump, primarily driven by growth in defense and exports. The balance sheet reflects solid fundamentals. The debt-to-equity ratio has substantially decreased over 5 years to a healthy 15.6%. Interest coverage is robust at 20.9x, indicating EBIT easily covers interest expenses. Total assets are valued at 90.2 billion rupees, resting on a solid asset base. Total equity stands at 53.3 billion rupees, providing a strong equity cushion. Return on invested capital is excellent at 31.82%, demonstrating high capital efficiency. The operating margin is approximately 19.5% for FY26. The bull case for Solar Industries is supported by robust defense and export revenue targets, a shrinking debt-to-equity ratio, and strong technical momentum following an all-time high stock price. The company maintains excellent capital efficiency with a high ROIC. In contrast, the bear case highlights a deeply stretched valuation with a PE of almost 99x. Increased working capital days and a minimal dividend yield are noted. Furthermore, the fair value estimate, based on a DCF model, is significantly lower than the current price, and dependence on government and defense orders poses a concentration risk. The consensus analyst outlook rates Solar Industries a strong buy, with all 8 analysts reporting no-sell ratings. The average 12-month price target is 16,697 rupees. Key supportive points are the company's strong technical momentum, record high revenue and profit, and the long-term growth potential from defense and export order books. However, a premium valuation of 99x PE is a major caution point, meaning any earnings miss could trigger a sharp correction. The Newall family maintains strong control over Solar Industries with a total promoter holding of 73.15%. Key stakeholders include Manish Satyanarayan Newall, the MD and CEO since 2012, and the Sohan Devi NL Newall Family Trust. The shareholding pattern shows promoters holding the majority stake, followed by FIIs, mutual funds, and individuals. No pledged promoter shares have been reported, demonstrating strong governance, although the compensation score is rated with a higher risk. Manish Newall's total compensation for FY25 was 241 million rupees, a 31% increase from the previous year. This includes 60 million rupees in base salary and 181 million rupees in variable pay. His pay is 115% above the industry median of 112 million rupees, but remains well within the 5% net profit ceiling mandated by the Companies Act, 2013. Workforce trends show growth, with 2,403 employees as of March 2025, up 27.4% year-over-year. The latest figure is 2,442 employees. Productivity metrics are strong, with revenue per employee at 40.9 million rupees and profit per employee at 6.98 million rupees, both on an FY25 basis. Both headcount history and revenue per employee trends show consistent increases.